Hello, everyone, and welcome to our tactical portfolio update for September 2025. I'm Michael LeBlanc, Senior Portfolio Manager with LLC Private Wealth at CG Wealth Management, bringing you the latest in global markets, key sectors, and focus on the Canadian performance. So let's dive in. Before we get started, again, I just want to remind you that we have the new Mike on Money feature starting. We started in September. Monthly market mistakes, where we will highlight areas of risk that most people overlook or might be overlooking in the portfolio. If you missed last month's on private debt funds, do check it out. It's been a big hit, especially since we've seen a few more failures in that sector since we put out the video. We also highlighted our videos on private debt, raising concerns about it back in April 2024. So do go check those out. Also, make sure you subscribe to our monthly email. You can go to our website, llcprivatewealth.ca. Keep you updated on all our content, including our small cap specialist team. They've been putting out a lot of good material lately. So with that, let's talk about the markets. Globally, September was actually a bit of a mixed bag, but a resilient month, especially here in North America. Investors navigated a pretty tricky macro environment. We had inflation chatter, central bank policy uncertainty out there, global political noise, all played a role in September. The U.S. equity market saw moderate gains, supported by the expectations that the Fed was going to start easing rates, which they did. We saw that rate cut come through finally in September for the U.S. markets. In emerging markets, though, the portfolio inflows dropped significantly. September recorded just 26 billion in new capital, according to Reuters, making it the lowest we've seen for emerging markets since May of this year. In the UK, the Bank of England issued a bit of a warning of a potential correction in the markets, especially if sentiment shift to the negative around AI or Fed policy. So, if the Fed started looking at raising rates again, we've had this looming potential inflation hanging around out there that could affect rates to the negative side or to the upside. But overall, markets seem to be balancing the optimism of the rate cuts overall, with a bit of cautioning around the weakening growth fundamentals that we saw out there. So, as mentioned, the central banks in both Canada and the U.S. Cut rates in September. Canada, we saw the Bank of Canada following consensus, and we saw the Bank of Canada cut another 25 basis points on September 17th and signaled that possibly another cut before year end. So, at this time, we're seeing the TSX futures inching a bit higher on that expected easing. In the US, the Fed also came under pressure as the employment data showed signs of economic softening down there, suggesting a possible more rate relief coming later this year. And investors globally were watching for the Fed speeches and the inflation, especially anything that was put out on inflation, looking for signals of how aggressive that easing might be. I will say in September, though, the beginning of the month was a bit better than the end of the month after we got the rate cut. And that was mostly, I think the rate cut was pretty priced in, that it was fully expected that it was going to happen. So after the rate cut happened, the markets just kind of still moved a bit positive, a little bit more back and forth with plus and negative days than we saw at the beginning of the month over the optimism of having the rate cut. So we saw the S&P up about 3.53% for the month of September. Dow gained about 1.87 and NASDAQ about 1.9. The TSX was the big winner at 5.1. So another good month, actually setting an all-time high for the TSX in September. So Canada continues to outperform. That it's had a really strong third quarter. As I mentioned, hit all-time highs. Had a little bit of pullback just after the rate cut, but overall all-time highs. That's the fifth consecutive positive quarter we've seen for the TSX in a row, so that's good. The futures are a bit muted about the rest for October, but we'll have to see how that plays out. A lot of it's being focused on the commodity prices as those dipped a little bit, and of course, Canada is a commodity country. We did see, though, the Canadian services PMI or price market, the market index plunge a bit in September. It's lowest in 3 months, and that's mostly reflecting the employment picture and weakening demand for services. However, the IVPMI painted a different picture. It jumped for the month of September, the strongest it's been in about 15 months, showing a bit of optimism, if you will, around construction, defense, mining names. Basically the government signaling ramping up military spending, infrastructure spending, and more resource commitments. So we've kind of got this divergent market here in Canada where services are weakening, but we're seeing much more on that defense and infrastructure resource side of things as we go into the fourth quarter of the year. And then that's, if you look at most of this year, that's not surprising. That's where we've been seeing, mining and defense being stronger, while we've seen kind of the service side of things definitely weaker through this year. That's how the portfolios have been positioned. So what are we looking at for the fourth quarter as far as themes and risks? Well, rate moves, the timing and magnitude of those rate cuts are going to be at the forefront of what we're looking for in the fourth quarter. Commodity volatility, Canada's resource tilt, swings in oils, copper, natural gas always have an outsized effect on the Canadian markets. Trade and geopolitical pressures, obviously, especially with the U.S. policy and protectionism going on. What's that going to look like for the different sectors that are more affected by those tariffs and different pressures we're seeing out of the U.S.? As I've already talked about, the divergent economic signals, we're going to have to play with those in the portfolios, overweight, underweight different sectors, and valuations, with things being at all-time highs. There's talks of bubble, investors, enthusiasm being high. Could we trigger a possible pullback here? So those are all things we're taking into account for the fourth quarter. But again, overall, we saw September looking quite good, and despite some broad mixed signals, we saw the portfolios performing very well. If you're looking for performance in the portfolios, go to our website, llcprivatewealth.ca. We post those. They should be posted by the time this video is released, so you can go there and check out the latest numbers. There's certainly the Canadian side's doing a lot better, as evidenced by the performance of the TSX over the US. So our US portfolio is in line, but it's been weaker on the US side. But we did back in January actually really reduce our US exposure in the portfolios, increasing our Canadian exposure. So that's been reflected in the portfolio's performances as well. So what's going on exactly in the portfolio? Well, another strong month, obviously. In the broad tactical portfolios, we didn't have any big shifts in there. We did trim and rebalance, driven by our valuation process that we strictly stick with. We have a strong sell and buy disciplines in all our portfolios. So there was a bit of rebalancing where we're taking profits from some of the bigger winners. Our overweight Canadian bank and utility positions continue to drive solid returns, as well as the gold and defense positions that we talked about have done exceptionally well in the portfolios. So we did shift around some weightings in those areas as they've grown to be a bit overweight, even more overweight than we had them in the portfolio. Our top performer continues to be our Canadian small cap portfolio. Remember, this is designed for investors who can accept a bit more risk but are looking for higher returns over the long term. We're not publishing the details on it yet. If you followed the videos, we have to wait a certain amount of time before we can do that. But if you reach out to us, we've had a lot of people show interest in adding a portion of the portfolio to get that to get exposure to that side of the things. The small cap indexes in Canada and small cap sectors in Canada has certainly been outperforming this year. So if you'd like more information on that, do contact us. We can talk to you about what those portfolios are, and whether it's appropriate for you to have some exposure to them. But we can't publish it just yet. But we can talk to you if you give us a call. We can give you more details. I should mention as well, our small cap specialist team was invited and went and presented at the Small Cap Discoveries Conference here in Vancouver. It was a great event. In fact, I'll make sure we include a link to the interview with Harold Leishman, one of our team partners, where you can learn more about our involvement there, and also some links to the Small Cap Discovery site, where you can check out the conference that they do every year. Overall, September closed on a high note. Momentum and rate cuts are setting the stage for the rest of 2025. So thanks for watching. Don't forget to like, subscribe, reach out with any questions. Look for our next Mike on Money video for monthly market mistakes. There's going to be coming out shortly. We're talking about principal protected link notes this month, when to use them, when to watch for, and some mistakes that you might want to avoid. So until next time, I'm Michael LeBlanc, and this is Mike on Money. Thank you.